Well, let's then begin with the second module, Challenges in the Deaccumulation Stage in Latin America. In this session, we're going to have a regional overview and the main factors to take into consideration and to organize the deaccumulation phase in the pension systems of a region. The module is going to be moderated by Manuel Garcia, that will also present during this module. He is a consultant from the Division of Labor Markets and Social Security of the IDB. He is a technical advisor to PLAC Network and has a lot of work done in the Caribbean and is part of the team that manages the MOC, Pension in Latin America and the Caribbean of the IDB. Please, Manuel, come to the floor. He has 20 years of experience in the area of Social Security and pensions. Prior to his arrival to the IDB, he worked in APG in the Netherlands, in a 421 in Mexico, in the World Bank, the International Finance Corporation, and Yale School of Management in the US. During his career, he has also been an academic in Mexico, in ITAM and Chile. He is a graduate economist from ITAM in Mexico, and he holds a master's degree in international economics and development from Yale University in the US, and a master's degree in pension in aging economics from the University of Tilburg in the Netherlands. So Manuel Garcia is going to be moderating here. And with him, we're going to have, well, I told he's going to be a moderator, but he's also going to be a speaker. We're also going to have Luis Felipe Jiménez. He's the superintendent, deputy superintendent for pensions of Colombia. Luis Felipe, please come here. He has served as an advisor to the Office of the Financial Support, and he has been working in the Global Social, Urban, Rural, and Resilience practice of the World Bank. He served as a director of economic studies of Asofondos, and he has extensive experience in the management of pension and fiduciary funds. He's an economist from the Universidad Nacional de Colombia. He holds a master's degree in applied mathematics from the same university and a master's degree in public policy from Georgetown University in the US. And we also have Jorge Mogrovejo. He works as a deputy superintendent at AFP of the Superintendence of Banking, Insurance FP of Peru. In addition, he's the first vice president of AIOS. He has been working in the Superintendency of Banking, Insurance, and AFPs for more than 20 years. He was president of the Pension Bank 2014 and 2016. He worked for 2 years in BIS, in the Bank for International Settlements, and the Financial Stability Institute in Basel. I don't speak English very well, so I cannot read all of this. So, well, I would like to apologize. But well, he was working in Basel in Switzerland. He's member of the board of the Superintendency of the Security Markets between 2010 and 2012. He has a bachelor in economics and lawyer from Universidad Católica de Peru, master's in economic policy management from Columbia University in the US. And we will also have Olga Fuentes. She is the intendant of regulation of the Chilean Superintendency of Pensions since September 2014. She served as the head of Studies Division of the Superintendency between 2009 and 2014. Olga, please come to the panel. She is the author of several articles in the area of pensions. She is currently vice president of the International Organization for Pension Supervisors, IOPS. Between 2007 and 2009, she was a senior advisor in the Ministry of Finance of Chile. She is a commercial engineer with a major in economics from the University of Chile and master in finances from the same university, and she holds a PhD in economics from the University of Boston. So I'm going to give the floor to Manuel Garcia. Thank you. So let's start our panel. So I have the task, not just being the moderator, but also giving you an overview of the challenges in the accumulation or payout phase in the region. So I want to do this very briefly so we can have time for our three speakers here, and especially having some time for your questions. So everybody understood through the messages in the previous sessions, news are not so good when we start to analyze what's going on with the payout phase in the region. So, from the opening of the event, we mentioned that these annuity markets are not working well. We just have one case in Latin America, and it will be represented in this panel, where we have the annuity market that is going well, but in the rest of the countries it's not working well for different reasons. And this is a world phenomenon. This is not just the case of Latin America, but also in the case of Latin America, we have some special features that make it more complex compared to other countries. So we have other products, program withdrawals that have problems, of course. But before going there, in this complex environment, in this dark place, I would like to invite you, first of all, to go a little bit behind and ask ourselves some relevant questions. Basically, what are the risks, the relevant risks, in this payout phase, but also in the accumulation phase, to understand the interaction and the relationship between these two phases? Who is going to undertake these risks, and how can we manage these risks? So I'm going to touch on some topics we have been discussing, but to have some perspective. In the accumulation stage, we have two main risks. We have many more, but I focused on two. One is the labor market risk. People saving, but not saving every time because they do not have a job, or maybe they are freelancers or employees in different times of their lives. And of course, financial savings do not have the return they are supposed to have. In the payout phase, we have many more risks, not just in numbers, but this is a phase in which workers are not working anymore, actually. They are not flexible to react when facing these risks. So we have a conversion risk. When we go to the payout phase, we have different movements in interest rates that might generate significant movements in the size of the pension and longevity as well. We already discussed this regarding inflation, labor market, depending on the characteristics of the product, and of solvency also, depending on the institution administrating this. Who is going to assume these risks? Here we have the defined benefits, in which most of these risks are assumed by an institution or sponsor, and we have defined contributions where we are transferring these risks to the person in the accumulation phase. And I want to mention this as well, because now we have many countries that have been for the first time here from the Caribbean, and they have different schemes for defined benefits. So my presentation will cover both schemes. We also have a non-contributive contributory pensions. This is a group in which they are not sharing the risk, and in the payout phase, that depends on the characteristic of the product itself. How can we manage this risk? Well, Daniel already talked about this. So we invented, regarding financial engineering, 3 ways of approaching this: diversification, hedging, and insurance. I'm not going to go deeper into this. Daniel talked about this this morning. So risk transfer, actually transferring them to another institution. It could be an annuity management institution or an insurance company. And additionally, we have some other tools, especially the toolkit from the regulator or the person who is designing all of this. Those are risk-sharing devices, parametric changes, age of retirement, contributions, and so on, that would allow to manage risks, especially the systematic risks. of the pension system. So if we think about these three questions and we see an annuity, well, actually, I'm going to start from the bottom up. This is a transfer of the risk from people who are buying this, for example, the annuity, to an insurance, or an insurer. This is not something defined, but it is a product in the type of a defined one, and it covers the risk of longevity, inflation, and so on. But the first message I want to tell you is that this is just one way of wrapping everything up together. This is a way that has been problematic in the region and in the world. But we have some other ways of bringing this together or not, and to answer all of these questions. We have some other types of products. Our colleague from the OECD will take you a little bit through that path, through the innovations we're going to see in the world, we're seeing right now, actually. You already saw this graph, but actually, I wanted to reinforce, I wrote it here in bold, that is the risk of longevity. And this is a context in which, from now on, any responsible person for public policies, this is the one we're focusing on. This is just to reinforce, once again, that Latin America is where the aging process is going the fastest. And this is impressive. Latin America will be the first region in the world where 1 out of 3 people will be more than 65 years old. And this will be before the rest of the countries or rest of the regions for 2080. So by far, this is our main challenge. Here we have the responsible for public policies. You know that the fact of adapting this pension system, readapting and redesigning this, is basically a very sophisticated task to perform for social engineering. And we have many ways to approach this. But we have 3 desirable goals and should be achieved when we analyze the systems. And they also have different markets for the people who work with public policies. One is financial sustainability, sufficiency, or social sustainability, we call it as well, and hedging. And as we have seen in some other meetings, the countries of the PLAC region, of the PLAC network in the region, we have different trade-offs. So, in general, these countries have financial sustainability challenges such as Argentina, Brazil, Costa Rica, Honduras, Nicaragua, and so on. And the countries of the Caribbean as well. So, countries DC have problems with the sufficiency, and the hedging is something that affects both kind of designs. And we're going to see later why. Because of also institutional aspects, governance, stability in the regulation, and so on. So the format is changed quite a bit. Well, but to go deeper into the payout phase, this payout phase, the design of this payout phase, is relevant in every one of these corners of this triangle. Regarding sustainability, what I'm saying is rules for indexation. Rules for how much does every peso cost, the accruals. Regarding the discount rates, mortality tables, what is the definition for those? And also the financing rules. These are topics that affect directly the financial sustainability. On the other hand, in DC countries, for example, the architecture, the ways you have for retirement products, if you allow to have lump sums. We also have indexation rules are normally in law. In some other countries, you have it in their constitution. These are topics that affect directly the sufficiency. And in the case of the coverage of hedging, or hedging, we are also seeing some great challenges from the DB and the DC countries. What I'm talking about is the low hedging we have in some countries. So here we have an inverse sense where we have low hedging in the accumulation. So we have a lot of consequences in the payout phase. So, for example, the DB countries where we have the vesting periods, if the hedging is low and it generates some cross subsidies in these systems or inequities, and in the DC countries, this generates a very great groups of people without any access to payout. So here we have the most important graph that I'm going to show you. This comes from this issue, from this great issue we have with hedging. What I'm showing you is the number of pensions. The blue line is Chile, the red one is Peru, and the yellow one is Colombia. And basically what we're showing is the amount of people that are going to retirement from the beginning of the operations we are controlling on the payout phase. And I think this is something very important. People in our region, here we have some countries, we have experience here, of course, but actually in the rest of the region, we could we could reproduce this graph. We know this is not working well. So let's talk about the payout phase, but we need to know how we're coming to this payout phase. We have here a demand of a product. So if we have this annuity market that is working well, then we have a demand problem if we go technical on that aspect. So on that sense, it is very relevant to discuss about the topics that Maria Teresa were discussing about. What can we do in the accumulation phase to be able to solve a problem that has consequences in the payout phase? So as a second message, I want to tell you that. I don't want to stop long here. I told you that the overview was not very good, and actually in the payout phase per se, we have different challenges. I already talked about demand, but also the annuity market has an offer problem that is very complex and a regulatory context that is difficult, an economic one with interest rates that have been decreasing. We have long life expectancies that are increasing, and this affects the annuity providers. Every time it is more expensive to give you guarantees the way they do. So basically, the annuity market are not functional. Just one case, the case of Uruguay. Of course, you have annuities, but it's actually the state the one that had to create this market that didn't exist. And we have some other important news about that we're going to discuss later. And we have some other products, for example, the program withdrawals. And these products could be improved, of course, the design of them. They do not cover the risk of longevity. They're typically we leave some money that is given up or given away to the family. So we have combinations of many products. Sometimes we have too many combinations. So at some points in the case of Peru, that has generated confusion. So it's not very clear. And we need to talk about the architecture of a default. What is the default of these products? We have tables for mortality rates that are used and they're not updated. As far as I know, there's just one country that has their mortality rate calculated in a dynamic way. There are some other risks, that especially in Latin America, the fact that we have the legal problems, we have the risk we have in Colombia, for example, pensions there. By a constitutional law, they need to be indexed to the minimum wage. This is something important, but we also have some judicial risk or legal risk in which the courts had given survival pensions, not just after the signing up of the contract, not just to the wives, but also to the third generation, and some other legal problems I already discussed. And apart from this, we have had some developments in some countries, especially in the case of Peru, where they have given an end to the payout phase, and this is discussed in Costa Rica. So basically, I'm going to go very fast here because Jorge will go deeper into this regarding the aggregates, and these are information from a survey we performed. My colleague Lucas was there in a team. We're the biggest AFP in Peru. These are the information. And we see that in April 2016, when we passed a law allowing workers to withdraw up to 95.5%, we have a rise by far with the withdrawals. So this is something that is very big. In the green line, we have the annuities. We see how they are decreasing. Now, in the survey, we have some interesting results that we're going to share, because this survey tells us that in 24 months from passing this law and having the right to withdraw funds, 13% has used these savings. 28% saved those funds. I'm going to talk later about that. 9% invested that, and the rest have mixed strategies. So out of this 28% that saved the money, 11.3%, this is the graph, put it into a transactional account where they're charging more commissions, more fees. They have, this is not adjusted to inflation, 47.9%, they put it in a bank, they generate something, but if we compare the results with traditional accounts and what the AFP is offering, they probably have bad comparison results. But 50% of people who withdrew the money is because they didn't trust AFP, or they thought that taking control of their money, they could do it better. Nevertheless, 2 years later, 30% of those people who have saved the money, our survey said that they didn't know what their return was. And 65% of those who had invested something didn't know or hadn't assessed if this decision was the right one or not. And finally, they feel at ease. They think it's no problem, I got my money. So I think people have a peace of mind. It's not the case of regulators. Jorge is going to tell us afterwards, but people do prefer clearly this behavior. They want to get those funds, but this generates a public policy problem. But well, then to wrap up and continue with the presentations, not all of these are bad news. We have better practices in the region, and Olga will tell us a little bit about one of those. That is the case of SCOMP in Chile. We have some tools that have been generated. Then in the case of Uruguay, that's very relevant. They're going to tell us a little bit in the rest of the conference, and some innovations in the case of recent success. That is how to pack up all of these facts. Our colleague of the OECD will tell us a little bit about that. But we have ways to innovate. We have innovation, and this conference will show you from those. And we have new technologies as well, ways of coming closer to affiliates. So blockchain, big data, and the behavioral science. So not everything is bad news, and this is the reason why we're here. Trying to give you this overview and trying to see what we're going to do next. This is what I wanted to tell you, so I'm going to give the floor to Luis Felipe.
Thank you very much. Thank you for the responsibility of having the responsibility of giving you a presentation after lunch. I think we have a very big problem in the payout phase, and I'm going to tell you what are the conclusions that we have today after speaking to regulators and different agents that have to do with the system. The IDB has helped us very much in the last discussions, so we've started talking about principles. I think that the principle of this presentation is, first, we have to design payout products. They have to be stable. That means that they need to have two features. One is to have annuities. We cannot design products that will get rid of all the savings, and they also have to be stable. I don't want the payout phase to be reduced on a long time, and they will be afraid of that it will not be enough. Let's go now to the main conclusions that we found. First thing that we must do is to design payout phase mechanisms. These have to include mutualities. This is something that is not because this is too expensive for the affiliates and too expensive for the system. The other thing is that we have been coming along a scheme where we have individual contracts, one-on-one agreements, person by person, which also involves a lot of risks. And I'm talking about annuity rent. This includes a lot of risks. And we have to ask if we should migrate to more collective schemes that involve less risks. And now I will also show you what we are doing. In the Colombian case, we have two ways of doing the payout phase. One are the annuities, and others are programmed withdrawals. Here are the last 4 years where we find 80,000 people in the regular savings system who have met the requirements for their pension, and 19% have chosen or are in their payout phase of their annuity. Out of this 19%, most of them are solvency, and only 3,000 people are doing payout phase with an annuity. Given out of 80,000 of these people, 60,000 of these people are pensioners. This shows the lack of appetite of the supply. Today in Colombia, people cannot choose between an annuity or a programmed withdrawal because there's a problem with insurance companies for these kind of annuity products. So we are all migrating to a different scheme, which I will show you in a minute. Then we also have the program withdrawal, which includes mortality insurance, which has failed. Everybody who has a saving that reaches a certain level that is near an annuity in Colombia, they had to go to an annuity. Given the lack of the market of annuities, this mortality insurance is not working. So here's a graph to show you the probabilities. This is probabilities of death for men and women in Colombia according to the distribution system. Now we see that these are significant parameters for individual savings. So what are the costs of payout phase in mechanisms of individual accounts? And I think that we have two costs. One is reputational risk, because this morning when we started with the systems, we were talking about that the systems are not prepared for accumulation or payout phases. So we also have to talk about the capitalization phase. That is when payout phases are happening in individual accounts.
Veamos un poco cuánto vale este.
So how much does this cost? If we, according to the scheme presented today, without including the longevity risk, we see 20 years here, the probability of a woman to have a payout phase with a product that offers a rent during 20 years, the probability of having a period without a pension is 80%. In a man, it's 53%. So we can say that 80% of women will probably be left without a pension, or 53% of men. Now look at the distribution. Together, it's 63%. How can we do a payout phase? In Colombia, we look at the programmed withdrawal is recalculated annually. And until 2 years ago, we were using mortality charts, which is something that we have to reassess within a product where there's no pooling. And we do a recalculation every year, but that is not enough to cover the mortality risks that we have. So we can see that with programmed withdrawal, as calculated 2 years ago, the probability of not having a pension in the Colombian population was 51.7%. This is terrible. 52% of the people were going to have the payout phase at some point and would not have a pension. And looking at the mortality rates, including improvements in mortality, we changed the technical interest rate, the discount rate, we include beneficiaries, and we reached a probability of decapitalization of 10.7%, but at very high costs. So we went up 12% in costs of a programmed withdrawal. If we had done this with a different product, would have been better. Why did we do this? Because we want to reduce this probability, and we think it's more transparent to tell a person at 62, your pension will cost you more, but they won't have to wait until they're 90, because we want that risk to be in the distribution of the pensions. And along the lines of what Daniel was saying today, we can think of mechanisms that join the two schemes, the mutual and the individual schemes. Here we have a scheme where we have a payout phase for some years in an individual savings account, and after some years, we include an annuity. Here we calculated it at a premium without risk in Colombia. Here you can see for the 90s, it's the same product with individual payout phase until 90 years old, and afterwards, mutual payout. This means that if we can design products in the first years of life, the individuality does not cost much, because the life probability is nearly null. So individuality is not expensive. Then we'll design products along the lines of what Maria Teresa was saying, products that are of interest to people, because we have seen that vulnerability is a very important factor in these payout programs. If we look at this, if we want to cover all the mortality risks of affiliates, today, the mortality rates in Colombia, these are not dynamic tables, but dynamic charts, but we can see covering the mortality risk until 97 years old, and we will have 12% of the costs, which we wouldn't have if we start to think of mutual schemes. That's what I wanted to show you. That's the first message, that we have to think about mutual schemes, because we have two costs, the financial cost and reputational cost. With the second question, which is, should we start putting together individual contracts and separating different ones? These are the graphs that show, this is the paper that shows what's the volatility of the reserves for different pooling. With a pool of nearly 1,000 annuities, here we have a volatility, the adequate volatility for the first years of life. The volatility increases as of 95 years of age, but they believe that this is adequate, but there are a lot of regulations that say with pools under 2,000 annuities, it is mandatory for insurers to have the reserve. So you need pools of at least 5,000 annuities in a country like Colombia, where we are creating pensions of individual accounts. To have this pooling is very difficult. It's not obvious in a country with 12,000 potential annuities to have 5,000 people in a pool. That means that the reserves of the insurers will have a lot of volatility, which will immediately be seen as a lack of appetite for annuities or in a big cost for annuities. Here we have to start thinking, in Colombia we've already started thinking of schemes, of bids, of annuities of the following months. This has been done in the banking sector, makes that every credit must have a life insurance which is related to this. Today we have bids for those life insurance. But we have to start thinking about this, because for all the insurance companies, it's very difficult to make a pool. Here we're talking about homogeneous populations, but when we start to put all the heterogeneous parts to this, we have to talk about minimum wage, men and women, and this becomes very difficult, and we will need a very big pool. And the third thing I want to talk about is that today, apart from annuities, we are including a lot of risks. We have to talk about extra longevity. We have to see how we can separate this and what is the role of the state in all the risks. When we talk about sleepage, we have to talk about minimum wages that have to be linked to the growth of the minimum wage that always increases according to real terms. This is a big responsibility for insurance companies, because there is no security that can mismatch these risks. So now they already have a reinsurance method that has only one insurance company has been able to do this, but we have to start putting all of these risks together, where we have also the private sector and the government. We have to look at the role of the government, if it's going to be an insurer, or if it should be, or if it should have a more comprehensive role. So we have to see if this is an appetite for the private sector, or if they will not be able to be insured. So those were the three messages I wanted to give you. Thank you.
Felipe. Jorge.
Jorge. Oh, yeah? Okay. See, I'm going to present the challenges in the payout phase in the case of Peru. I'm sorry to tell you, but this is the way we should not proceed, because what's going to happen in the future we cannot tell. But it's interesting to see how we arrived to this. In 2016, there was a great change in the payout in the pension system until the year, like in Chile, it was compulsory to have an annuity or a program withdrawal. And what we had is, for the person who had a very low account, around $1,500, we were allowed to have to withdraw 100% of it. So we had many accounts of $2,000, $3,000. I mean, you know that with $5,000 you cannot have an annuity, and this had a greater reputational damage to the system. People that would have annuity for $50 or less. So this was a very bad scenario we had. And please remember, this was a young system, and of course they're going to had people that didn't know a lot about this, that had not accumulated so much, and of course they wouldn't have the same situation as if they had saved in a private sector. So the legal changes went through came in the moment of a reputational problem. We have different obligations of publishing all mortality And we had a chart, a table that was done by Deloitte Spain, and the mistake was done through a press conference. We cannot do this because this is very technical. So when I was supervisor in a bank, I never had a press conference because this is very technical. So they asked a fatal question, and with this chart, the pension is going to be less, and the answer was yes, but actually it was false because this is regarding reserve. This depends on every person. So this new table would make companies to reserve more and would protect the retiree. And then all of the headlines said the superintendency is going to reduce pensions. The politicians came to us and started to talk to us, and actually the superintendent had to quit. So then he leaves, and we have the draft, the law draft. So they wanted to go from 1,500 to a reasonable amount of money. So the Congress said, let's do it everything. This was in electoral months. We had a short period of time before the change of administration, and the superintendency was weakened, was there. So we had the law was passed, and people could withdraw the whole money from their pension. So we have the lump sum withdrawal. Why 95.5 and 4.5%? Because 4.5 goes to the health system. So we can have 4.5% that is nothing to ensure their health for the people who are retiring. This is a problem. We could break their program withdrawal. This was awful as well. And the active affiliates could also withdraw up to 25% of their AFP for a down payment or for a mortgage or for a first housing credit. So millions of dollars went away. This went against all of the Social Security principle. The idea was that this money, it could be for pension, not for buying a house. This was passed in 2016. But this effect of 95.5 was combined with what was there previously regarding the anticipated pension system. What calls our attention is in this graph, when people were retiring like this, they should have the same amount of people. Why do we have this peak? Because we have this anticipated retirement system. I think this is the only one in the region. I think Mexico also has this. But if you could show 1 year without contributing, that is not the same as being unemployed. If you are 50 years old as a woman and 55 as a man, you could go into retirement. But before this meant to get a pension. But what would happen with someone of 50 years old? Their capital was not so big. So actually, the amount was very small. So many people went into this system, or they could withdraw the half. But with 95 and 5, with the advanced retirement because of unemployment, you just have to show that you didn't work for 1 year. This is very easy in Peru because the normal average worker nowadays is working in a company, and tomorrow they are freelancers, and we have different types of income. So the average Peruvian worker has a working life that is very different, I would say. Many people would go to their employer, please get me out of the payroll, you pay me independently, and this started in 2016. And we have the ordinary anticipated pension. You could do that if you could show a replacement rate of 40%. You didn't have any age, because if you wanted to have this, you were old enough. Of course, you were thinking about someone who's 60 years old who had a capital and they could go into retirement. In Chile, you can do this when you have 70%. So what is the meaning of this? So this was done through voluntary contributions. So people with a lot of money that didn't have 40%, they could have voluntary contributions. They would reach the replacement rate and they would get all the money. And then we have the banking industry that would offer services to prepare the file for anticipated retirement with a bank loan. We have credit lines and business lines. If you're missing this money, we're going to give you the money. So you have an AFP, we're going to tell you how to withdraw your money. And then the worst part of it, they were illegal lenders who were doing these operations, because this money had to be there for a couple of days, and then 95% would go from the compulsory one, because the 5% was not taxed. So we're going to see what happened afterwards. But well, actually the average age came to 58 years, because actually the average should be 69 or so, but it came down to 58. So what do we see in the country? Here in the blue chart, what we see is what they withdrew in cash, the lump sum. The yellow part, they got a mix, a little bit of pension, a little bit of withdrawal, and just 1% in this period from the passing of the law had a pension product. And on the other side, we see the month evolution of the number of annuities, and we see that between 2016 and 2018, 89 people have annuities. So this is the graph shown in a different way. Here we have the peak. These were anticipated retirements. This is an amount of people. We went from more than 9,000 to 71,000. What is this? Sudden aging of people? No. These are people who find cracks in the system. They trick everything around. They stop contributing for 1 year. And this is an attacked system by people who know the problems in the law. And here we have a peak, an increase. And you see here in 71,000. I mean, we had an average of 9,000 before. This is in people. Let's see what this means in money. In money, it's not so much, because many people with a lower account were withdrawing their money. And this is bad, because these are middle class people who had low capitals, but even if they had their money parked there or stationary there for the rest of their lives, with the profitability of AFP could have a good money. But going to retirement with 55 is ridiculous. But this is the amount. And in blue, we had the pension. You always have some people who understand, but not so many. And here you can see the type of retirement. Here in the blue ones, you have the annuities of legal retirement, 55 years. 65 years. These start disappearing. The biggest one, the light blue one, we didn't know how to call these people, because the people were not going into retirement. They would just withdraw money. We call them withdrawers. So this is the amount of people that have this anticipated retirement. They have this great light blue area. These are the withdrawers in the legal manner. These are people who are 65 years old. Those who are in their 50s are most of the people who withdraw their money. So in an interview with a journalist, I told them, well, our private pension system is a savings program for middle age. So people would go to Hawaii, they would buy a nice car, they would improve their home, and so on. So we had a perversion of the pension system. So this is the amount of people who went into retirement. So you can see here in orange, this is the amount of people who have ordinary anticipated retirement. This is people who had an interesting capital. They would lend money, and they would get all of their money. It's 1,500. But look at the money here. It's 1/3 of the volume. And here is people who go and retire in their right age. So what's going on is that many people that probably could have saved more, and they could have a pension with an interest money, they're just withdrawing this at age 50. So people are saying, okay, I'm buying an apartment, I'm going to rent that, and I have a friend who's doing this. She bought the apartment, but it's not there. She's not working with it. So people are happy with what they're doing. That is complicated to explain because they feel they made a right decision. We have pathetic cases. People withdrew their money. They use a transactional account in the bank. They pay 0.001%, and their money is just there. And they say, okay, I'm going to get more profitability, and the money is there. So this has to be with the behavior that seems to be irrational, but that at the same time will have hard consequences in a couple of years. And this is something that is adding to what Manuel showed. Here we have some surveys. As in any survey, any interview, of course, you're going to have the sample. Maybe people are not telling the truth, but this is a methodology that you have to respect, of course. They're trying to follow here, since the Superintendency of Peru is banks, insurance, and pensions. We had information of people who had withdrawn their money, and respecting bank secrecy, we asked the banks to tell them who had term accounts. We wanted to know the whole volume, and we could then track. And this little one, 1.2, are temporary pensions with deferred annuity, and we have all of this. This is almost nothing. What is this 23%? Banks. People who brought their money to the banks. The yellow one, insurance companies. How can you say this? So facing this chaos, we saw with the money, and that insurance companies lost the annuity market. They reinvented themselves, and they offered some other kind of annuities. So people would go and give the money to the insurance company. They say, I'm going to give you an annuity for 10 years. You may have a return of capital of 80%, whatever, or nothing. They didn't care. But they felt they had an annuity that is subject to the term that they had signed to. So this is 2017. I think this is 3 times more right now. People understand this. People understand that they're taking their money and they're giving the company this, and that their capital is there. And if they die, their families will inherit. So we have to pay attention to the products and how people understand them. They think this is an annuity, but it's not. This amount is interesting, this percentage. 13.3% stayed in the AFP, but with a voluntary contribution without any pension goal. People would tell them, okay, if you want, you can withdraw. People withdrew that, or they left it there, but without any pension goal. So I have their profitability of AFP. I'm going to have more profitability. I have all of the benefits of an account. And in 2017, we had a good year. So 13% of the funds come from the pension funds and go to the voluntary contributions of AFP. If these affiliates let this there, and most of the case they came from the salaries, they wouldn't pay any kind of fee, and the money will be there still. And they would pay then more fees because this was a voluntary contribution. This was such an irrational decision, because they are getting their money once again from the money they were getting anyway. And we have here 56%. We have no track of this. They may have consumed this. They may have paid their debts or anything else. And to wrap up this, what are the challenges we have in a payout phase in Peru? Well, the question you asked me during lunch is, are you going to go back to the pension products? So, because of the low density of contribution, the average of people who are 65, and even if they have taken away money for mortgage or they have any other withdrawal, this will have a very small account. So we had around $315 as a pension in average, and we had a replacement rate of 38%. So the attractive part of this cash withdrawal overcomes any kind of concern regarding the absence of incomes in the elderly age. So people think they're like forever young, like the song of Alphaville. They think they will work forever, or their children are going to pay for them forever, or they're going to invest somehow. They have a great optimism. Nobody talks about longevity, and I think being a young country, this is a great problem. And there is a generation that has seen their grandparents that didn't have so much trouble because they would have a lot of children and someone would take care of them. My grandma was in many places. She had 5 kids, so it was easy. And their children used to have houses. Now I want to see people my age, how they can have their parents at home. So cashing out is the winning option. Many people who go into retirement at 55 years old see this individual account as their working capital. They see this as an opportunity to invest this, even if the rate of bankruptcy for companies is high. Sometimes they lend money to their brother-in-law to have a beer company or stuff like that, and this ends up in bankruptcy. So the insurance companies that lost this pension market, they have flex rates with and without return of capital. What is the challenge? What we want to do is to design pension products that are voluntary, that have a flex retirement, but this is tied then to an annuity. So a person who has a flex pension, in a regulatory point of view, they will have either way their income, because the view of a person changes from 65 to from 75 or 85. So this should be a product that is attractive. And we have beginning to deregularize the pension to have different quality services. Thank you.
Muchas gracias, Jorge. Olga?
Thank you very much. Okay, I was left to the end. I don't think here we have a gender equality. I wish to thank you for the invitation, for coming to give my presentation. I will be touching on some of the points discussed by Manuel in his presentation. My presentation will first start by saying what we think are the main elements that should be included in a good design of the payout phase. Here we have some elements which we think are important. First of all, the pension must comply with some kind of objective of softening consumption between the active and the passive stage, where the main focus of the reform is the sufficiency of pensions and the payment profile. Even though sufficiency will not be touched on here in my presentation, when we talk about different modalities of pension, what's the best structure mechanism for people to choose their method or their modality, it's also relevant to understand if the level of pensions is adequate. The selection of a modality is something different. If there is a big demand from the people, because they say that the pensions are low, and so there's a problem with sufficiency in the country. But leaving that aside, I'm going to focus on selecting the different modalities and what are the mechanisms that we have introduced to make that selection suitable for an optimal decision, so that the person can have as much information as they can. Another element for a good design is that we need to have a balance between flexibility and protection. People give value to stability in their payments, and also to be able to go between the active and the passive phase with some kind of payment design that will give them some kind of flexibility to combine pensions and jobs, labor payments. If they're going from active to passive, from going from a full-day work to a part-time job, they want to complement that with a pension while they continue to have part-time income until the last time when they will only have their pension payment. We're also talking about protecting the risk of longevity, which is relevant. We ask ourselves regarding program withdrawal. Some people say that it's not a Social Security product because all the risks are faced by the affiliate. And we have found alternatives and proposals that include a change in the design of this program withdrawal in order to have longevity risk covered there also. The options, the default options, are also part of the design. We have talked about having a default option, but when we are choosing modalities, this is not as trivial in order to define a default option when we think that it is robust. Also, communicating and informing the design for the people to be able to choose the modality. We have tried to see how we can better inform the affiliates about this. And lastly, we are going to see presentations in this seminar. We're going to see about how other countries are doing this, but we have to be able to understand the experiences of other countries that will allow us to put in our design things that we haven't included yet in our pension systems. In this case, we can talk about sharing risks, collective schemes, and insurance and guarantees. In a pension system like we have in Chile, we have relevant risks that have to be considered, like longevity, investments, interest rate, and human capital. This is very important in the accumulation stage. Also, the contribution density in Chile is quite low, especially for women and younger people. We have a bimodal plan for women. There are some places in Chile that have very low populations of women, but it's very heterogeneous when we talk about contributions. And the design of the system must be adapted to the independent situation to have labor reforms that will improve all of this. This is the evolution of the determinants of the pension amounts. This is the C fund. The individual accounts, you can choose between 5 different funds. One fund was introduced with the system, and you can see how the profitability, the real annual average profitability has fallen since the creation of the system until now. In the 80s, the annual average was 12%. In the last 10 years, the profitability has fallen 4%. These are the technical interest rates of the program withdrawal and also annuities. We can see that it has gone from 6 or 7% to 3%. And finally, we have the adjustments for life expectancy according to mortality charts, which we do regularly. And from 85 until 2014, for men, there was an increase in life expectancy of more than 3.5 years, and for women, 6 years. So if I combine all of these effects that have happened at the same time in the effect of pensions and partial pensions, I just said that we have updated the mortality charts, mortality rates, but unfortunately there are some other regulatory parameters like the contribution rate that remains stable, the same as when we started with the system. And we need to increase that rate to 14%, although that won't be enough, so that we can have an adjustment that will take us to having greater pensions given the situation and the main determinants in the past years. What's the regulatory framework? To choose the pension modalities. In 2004, the SCOM was introduced. The main objective was to give more information to the market. The selection, how to choose modalities, we have 4 different options. We have programmed withdrawal, the immediate annual rent. We can combine these 2 together also. And we also have a modality which is temporary rent with a deferred annuity. The affiliates that cannot fund with their savings the value of the solidarity basic pension cannot choose the modality, the annuity, and they have to go into the same scheme that can fund the PVs. We also have the solidarity pillar, which was introduced with a reform in 2018, which is focused on 60% of the poorest part of the population. And when we look at the modalities of pensions and we analyze the risks that I mentioned before, we also have to keep in mind the design of this solidarity pension, which has been very good to alleviate poverty, and also it's a risk mitigator because of the way it has been designed. When we analyze what is the longevity risk of a person who chose a programmed withdrawal, is different than when we look at the pension fund of a person who does not have solidarity pension. The pillar, depending on the regime of the person, has complete longevity or partial longevity risk, because it will give them annuity base. Mortality rates are for 6 years. It's done by 2 regulators. They have the best practices between HOCDE countries, between OECD countries. They are dynamic. They include factors of improvement for future longevities. And now looking at this system of consultations and supply of the amount of pensions, we have an interconnected electronic system between CSV and AFPs and pension advisors. And the objective is to deliver in a very clear and comparative way all the information of the supply of the different modalities for pensions. People need to have a pension fund. Only the people who can go into this system have to select in the system the offer that is given by the company for an annuity. So this mechanism reduced in a significant way the costs. It eliminated the asymmetries of information. This is a blind system. We know the main features of the people, the beneficiaries, the age, but we don't have any additional information. And the companies have to offer. I get a certificate of an offer, and I can choose different modalities. I get the certificate with all the information, and I choose the modality that adapts better to my profile. We started in August 2004. And what was the situation we had before ESCOMP? We had a very high level of commissions, 6 or 7% on the balance. We had conflicts of interest in intermediation. We had excessive use of anticipated retirement. They wanted people to retire as soon as possible to finish the intermediation process, and there were asymmetries for information. It was very difficult for people to get a good offer because they didn't have the good mechanisms to find the information. The advances or the progress and the actions introduced by the law of ESCOMP, well, limits were established for these intermediation commissions, 2% for annuities and 1.2% for programmed withdrawals. Mortality rates were defined regularly between two regulators. That was introduced by this law. And we changed the requirements for anticipated retirement. This has become more strict than before. Before the pension reform of 2008, with the figure, the person of independent pension advisor was created. And if we do an assessment today of the situation after ESCOMP, we can say that most of the flaws were resolved. We have better transparency, we have better costs, and we deliver better offers to the people, more competitive offers. But there are other spaces for improvement. As we had last year, there was a study done on annuities market and the operation of ESCOMP. So a report was delivered, a public report, and we can see some other studies that talk about the role of the sales agents, what's the value added of advisories, and the competency and external offers that we have in ESCOMP. So before we talk about the regulatory changes and what we are considering when we select the modalities, I'm going to tell you that the main results of 2018. The flow of new pensioners is 155,000 people. 33% of these people went to ESCOMP. The rest of them weren't able to have self-funding in order to choose their modality, so they had to go to program withdrawal. Those who were able to choose, here we have the participation in the different modalities, annuities, 28-29%, and the modality is increasing. Temporary rent with deferred rent has increased a lot, 43%. This modality has been increasing significantly in the past years, and mainly it's because it meets liquidity needs with a stable pension for the future. We would like to develop this product more, as the deferral is 4 years. The maximum deferral here is 7 or 8 years, but those are exceptions. And the regulation shows a difference between temporary and annuities. Some people want to have the temporary income to be twice the annuity, the deferred annuity that they will receive afterwards. We could think of different combinations that can meet the needs of the retired people. We could have a temporary income that might be lower, or a deferred income that can give us a higher amount for older age people. This is the evolution in the selection of the modalities for pensions. These are the new pensioners. This is also those who need to have a programmed retirement, mandatory programmed retirement. And it fluctuates between 25 and 30%. But if we put this in a context of the complete system and all the benefits that the system provides, and we want to look at what's happening with longevity risk and who is exposed to this, we can see that from the stock of pensioners, there's between 25 and 30% of people who are exposed to longevity risk, because these people are only in the program retirement plan and they're not receiving solidarity plans. So if we wanted to put mechanisms into the system that can cover the pensioners of longevity risks, we have to start by identifying what's the universe of the pensioners who do not have this risk covered. Regarding changes in regulations of ESCOM, in 2018 and issued in 2019, we did regulatory changes regarding how we present the information on the certificate that the affiliates receive to make their decision. We want this to be easily understood. We want them to know what will be involved in the process of retirement. The amounts of pensions are now also presented in pesos. They also look at the annual differences in pensions according to different offers. And that's a way that we can tell the people how much they would receive in 1 year. We also have transparency and show what the commissions are also in the process. And we also included a previous stage before making a final decision where the person must confirm that they are taking an offer that is not giving them the highest value of the annuity. So they have to sign saying that they know that the system is offering them a higher value, but they have chosen something different because they valued something different, like the company or any other reason. So they have to sign this as an agreement that they know of their decision. We are also involved in a study. We're doing a pilot to see how we could modify the certificate of offers or supply for the people to choose the best modality of their pension. Looking at the pension reform, which is being discussed today in Congress, the main actions that are being adopted have to do with covering the risks and the payout phase. So we're also looking at the solidarity pillar. We also authorize the affiliates to buy deferred annuities and to improve the supply of the offers in the SECOM. In the design of the ESCOM, people receive the offers from the different companies, and also after that first stage of offers, you could go to an agent or directly or with an advisor to the company, and the company would improve the offer. But evidence shows that a very high percentage of annuities are closed with external offers, with 90%. And that shows that the competition in the system is not powerful. It's not a strong competition. If we look at the best internal offer, depending on the channel used as an intermediary, we can see that if we go to S-Comp with the company, the difference with regards to the best internal offer is 3%. And directly 0.2. So it was a mechanism where the design was introduced with the logic of improving the offers, but in practice, it weakened the offers that were made in the system. And finally, this is something that the reform is looking at, trying to introduce additional characteristics or features of the affiliates according to their incomes so that you can have better offers from the company. Because there is evidence that people that have lower income have less life expectancy. And if you look at the results of S-Comp, we see that the number of companies that offer annuities increase according to the percentile of savings. I mean that people with low income receive less offers. And if we wanted to use as a proxy of quality variables between annuities and the first payment of programmed retirement, we can see an increase according to the balance. So there would be better offers for higher balances. So in low balances, there's a trade-off between the cost of an annuity and the difference in life expectancy, which might not be reflected in the offers that S-Comp is giving us. And I will finish giving you the main conclusions and challenges. We need to deliver clear and precise information for people to make their decisions. There has to be coherence between the actions adopted in the active and passive phase. The design of modalities have to fulfill the needs and preferences of affiliates, and they need to have independent advisory. And the regulatory parameters must be updated frequently. We have parameters that are updated frequently, but the contribution rate is something that wasn't done, and this reform is looking at this as one of the very important aspects. Thank you.
Muchas gracias.
Thank you very much, Olga. We left Olga by the end because she was the only one who brought good news. Well, we don't have time for questions, but maybe you can talk with our speakers later during break. Thank you.